Welcome to the Microsoft Dynamics NAV 2013 Finance New Features course presented by Dirk Reeps. This is the third course in the Finance series. This course will cover the new features in cash flow, so knowledge of previous versions of Microsoft Dynamics NAV is a prerequisite. This course was built on beta versions of Microsoft Dynamics NAV 2013, so there may be some slight differences in the released product. Now, let me introduce Dirk.
Hello and welcome. My name is Dirk Reeps. I am support engineer for Microsoft Dynamics NAV in EMEA, and today I will talk about the cash flow forecast functionality in Microsoft Dynamics NAV 2013. What I will do in the next couple of minutes is providing you an overview about the cash flow forecast functionality. I will introduce this functionality to you, and in the following I will discuss the main important aspects of the functionality itself. I will give you an overview about the different sources for cash flow forecast calculations. Next, I will discuss the main parameters for the cash flow forecast calculation. And then we will see a demonstration of the way this functionality works in Dynamics NAV. Then I will introduce the reporting features of the cash flow forecast functionality to you. And finally, at the end of this presentation, I will summarize this session for you. Before you start with this course, I would like to recommend reading the training documentation for the cash flow forecast functionality and the workbook for this session. Module 1, Introduction. This module gives you an overview about what you can expect from the cash flow forecast functionality in Microsoft Dynamics NAV 2013 and which level of flexibility this feature offers to you. The intention of the cash flow forecast in Dynamics NAV is to give you an estimation of the cash flow for your company. The intention of the cash flow forecast functionality is not to serve any legal requirements like creating cash flow statements or legal financial reporting to any authorities. The cash flow forecast is a prediction on how your liquidity will evolve over time. In many different businesses, people need to make forecasts and estimations, and therefore they have to consider a big variety of different aspects and parameters. This happens with or without a dedicated cash flow forecast functionality. The forecast and estimations are just that, forecast and estimations. And also with the cash flow forecast functionality in Microsoft Dynamics NAV, you cannot expect to get 100% preview about the future. But the cash flow forecast functionality in Dynamics NAV can help you to make better estimations and better business decisions. For a cash flow forecast, Dynamics NAV takes the most recent information from different sources like GL accounts, open customer and vendor ledger entries, sales and purchase documents and other sources and calculates estimated cash flow results. Results in terms of cash flow forecast are cash flow amounts and cash flow dates. A user can influence the cash flow forecast calculation when he uses the different sources and different parameters in the cash flow forecast calculation in Microsoft Dynamics NAV. These calculations will give you estimated results, no more, no less. The quality of the result depends on the quality of the information Microsoft Dynamics NAV has, on the parameters used, and on the way the forecast functionality behaves. You want to include budgets in your cash flow forecast calculation, so the result of the cash flow forecast calculation depends a lot on the quality of the budgeted data, of course. When looking at the timeline for cash flow calculations, it is important to understand until when a source can give you valid information. Open orders can probably help for shorter periods, where budgets and manual expenses and revenues can also give information for a longer period. Let's take a look at the flexibility this functionality offers you. You can capture different cash flow forecast plans. For that purpose, you can establish one or more cash flow forecasts, which you can create planning from different viewpoints. For example, for every month you can newly calculate the cash flow forecast of your business and save the values as history. Before you can register cash flow forecast, you have to create lines in the cash flow worksheet. Usually You do this by using the Suggest Worksheet Lines badge. And depending on the sources you want to incorporate and on parameters used for the current cash flow forecast, you then get the lines suggested to the cash flow worksheet line table. If you want, you can manually add or delete lines or change dates and values in the suggested lines. It's important to know that as soon as you run the Suggest Worksheet Lines report again, existing cash flow forecast entries for the particular cash flow forecast in focus are deleted permanently. The user is not getting a confirm dialog or any other warning message. This means that in order to save a cash flow forecast, you need to make sure that for this particular cash flow forecast, Report 840, the Suggest Worksheet Lines, is not used again after you created the final version of this forecast. Let's take a look at this workflow diagram. You use different sources and different setup options, and by running the Suggest Worksheet Line batch, you will get lines created in the worksheet. You can then add and modify or delete information, and then you can register the lines and create cash flow forecast entries. And you can look at these entries by using different reporting and analysis features. And here we go with the standard definition for a cash flow calculation in Microsoft Dynamics NAV. You can create this structure on your own. This is just an example. Module 2. Sources for cash flow forecast calculations. In this module, you will learn about the different sources of information for cash flow forecast calculations. In your planning, you can incorporate values from the areas of general ledger, like liquid funds and budgets, from fixed asset, from sales, purchase, service, and also from cash flow itself. You can choose the different sources when you run the Suggest Worksheet Lines batch. When you register the cash flow worksheet lines, the registered information from the different sources go into different accounts of the cash flow chart of accounts. In the cash flow accounts, you have similar functionality as in GL chart of accounts or in the chart of cost objects. GL accounts. Liquid funds are values from certain GL accounts such as cash and bank accounts. For liquid funds, you usually integrate the GL accounts with the current balance. The cash flow date is equal to the current work date. Budgets. If you integrate GL accounts with a budgeted amount, then for every GL budget entry for the chosen GL account, a new line will be suggested to the cash flow worksheet with the budgeted amount as cash flow amount. So it's not the balance, but every single entry that flows into the cash flow forecast calculation. The cash flow date is equal to the date of the single GL budget entry. In the setup for the different cash flow forecast, you can specify the date range for budgeted data to be included in this specific cash flow forecast calculation. Currently, the budgeted amount appears with the opposite decimal sign. The reason is that the current design of the functionality focuses on profit and loss accounts. This means that from a budget where you have positive budget amount to represent expected cost, this is then resulting in a negative impact on the cash flow. A negative budget amount to represent expected revenue is resulting in a positive impact on the cash flow. If you want to work with budgets, please make yourself aware that a financial budget must not necessarily contain the information you want to use for the cash flow forecast. If you want to look at planned revenue, your GL budget probably contain the budget amount for the fiscal period where you sell goods or deliver service and where you have to register the revenue for in your financial accounts. But for cash flow forecast, you probably want to consider the revenue for the time when your customer actually pays the bill. Planned revenue for GL accounting for June might be interesting for cash flow in June, July, August or September. This means that you should not just take the financial budget and use it for the cash flow forecast calculation as it is, unless you are sure that the budgeted data are good for use in cash flow calculations. Instead, you could take the financial budget and copy it into a new budget just for cash flow forecast purposes, and then you modify the copied budget by moving amounts and dates and make the budget usable this way for cash flow forecast calculations. Cash flow, manual revenue and manual expenses. Besides the cash flow information which you get from the areas of general ledger, purchase, sales, fixed asset and budgets, you also have the opportunity to establish further influencing factors in the form of manual payments differentiated into revenues and expenses. Annual revenue can be, for example, rental income. Possible manual expenses are salaries, interest on credit, tax to pay like VAT, or planned investments. You can plan these manual revenues and expenses for specified periods and use them in calculation of the cash flow. The way you register manual revenues and expenses is pretty much the same logic as it is used in other parts of the functionality in recurring journals, where you also use a starting date and an ending date and a recurring frequency. If you work with service contracts, service invoices, and jobs, you can consider these areas for cash flow forecasts through either GL budgets or manual expenses. If you have your planning partly in GL budgets and partly in manual expenses, then you need to make sure that you don't get any overlapping information considered for cash flow forecast calculations. Fixed assets. If in fixed assets the planned acquisitions are budgeted, then these value can also be incorporated into the cash flow calculation. When you then want to buy an asset and you create a purchase order for this acquisition, and you also want to include purchase orders in the cash flow calculations, then you need to make sure that you don't consider the budgeted asset and at the same time the open purchase order. You could create a purchase invoice instead of the purchase order because purchase invoices are not included in cash flow forecast calculations. And you can also incorporate the planned disposal of an asset, entries and orders. The easiest way to incorporate amounts receivables and amounts payables would be to take the balances from the GL accounts for receivables and payables. This should give you correct total amounts. However, you then would only look at the total amount and you would not be able to see the information on the timeline. You could not see expected effects on your cash flow. Therefore, it's a better idea to look at open customer and vendor ledger entries with details about the expected due date and the remaining amounts. Additionally, sales and service and purchase orders which have been placed already but not posted into receivables and payables yet can give you information about the expected cash flow. At the end of the process, it all comes together in the cash flow chart of accounts. As stated in the beginning of this module, you can incorporate values from different areas. You can choose the different sources when you run the Suggest Worksheet Lines batch, and when you then register the cash flow worksheet lines, the information from the different sources flow into the different accounts of the cash flow chart of accounts. In the cash flow chart of accounts, you have similar functionalities as in other chart of accounts like building totals, and also the reporting features for the cash flow forecast functionality based on the cash flow chart of accounts. Let's see how this looks in the application. You find the cash flow forecast functionality in the financial area. Let's start with the cash flow forecasts. Here we see that we have three different cash flow forecasts. For example, two for January 2014, but with different setup options. You can use as many forecasts as you want for the same period. In the next module, we will take a closer look at the setup options, but for now, let's take a look at the cash flow worksheet. The worksheet lines will be suggested by running the Suggest Worksheet Lines badge, which is available on the Home tab of the ribbon. We need to select a cash flow forecast. Select the first. And we decided to include all the different sources, including budgeted data. Click OK, and we get lines suggested. Lines for all the different source types, like liquid funds, receivables, payables, so open vendor ledger entries, purchase orders, sales orders, cash flow manual expenses and cash flow manual revenue, GL budgets and service orders. Next, we register the lines. Okay, now let's take a look at the chart of cash flow accounts. Here we find the single accounts which represent the different source types, receivables, sales orders and so on. We find values which come from the cash flow ledger entries which have been created when we registered the worksheet lines before. We find accounts which represent the positive effect on cash flow, the cash receipts. And we find accounts which represent the negative effect on cash flow, the cash disbursements, and we find totals. Some of the source types can only be used once in the chart of accounts, like fixed asset budget, payables, purchase orders. But some of the source types can be filtered and used more than once, like budgets and liquid funds. The source types manual revenue and manual expense can also be used more than once, as in the manual revenue and manual expense you can maintain a fixed relation to a specific row in the chart of cash flow accounts. Let's go back to the cash flow worksheet and run the suggestion batch again. Take suggest worksheet lines. We leave all the setting, tick OK, and new lines will be created. But this time we don't register the lines and go back to the chart of cash flow accounts. If we now look at the chart of cash flow accounts again, and we look at the amounts, and we drill down, we see that the existing entries have been deleted. As mentioned before, if you run the suggest worksheet lines batch again, existing cash flow forecast entries will be deleted without warning just by running the suggest worksheet lines batch again. Module 3. Parameters for the cash flow forecast calculations. In this module, you will learn about the different setup options and parameters you can influence for the cash flow forecast calculations. For open entries and open orders, you can use different parameters to calculate the cash flow date and the cash flow amounts. These options will be set in the cash flow forecast card. Depending on the parameters, the result in your cash flow forecast can be very different. All in all, the main parameters for the cash flow forecast calculations are the source types you include when you run the suggest worksheet lines batch, the current work date, the setup options on the cash flow forecast card, including the date range used for GL budgets and the date range used for manual expenses and for manual revenue. And of course the quality of information from the different sources. It doesn't help much to include the GL account for the bank in cash flow forecast calculations if you didn't post any bank transaction. It doesn't help much to include the GL account for the bank in cash flow forecast calculations if you didn't post any bank transactions of the last month. Let's take a look at the parameters for cash flow amount and cash flow date calculations for entries and orders. Consider discount. When you use the consider discount parameter, it means that payment discount has to be considered for customer and vendor ledger entries and for sales, service and purchase orders. For customer and vendor ledger entries, Dynamics NAV takes information from field remaining payment discount possible of the open entry. And for sales and service and purchase orders, Dynamics NAV considers the information from field payment terms code on the document header in combination with the document date. Consider payment discount tolerance date. When you choose to use a payment discount tolerance date, the application uses information of the payment discount grace period field in the general ledger setup to calculate the cash flow date. Consider cash flow payment terms. When you use the consider cash flow payment terms parameter, it means that the cash flow date and also the cash flow amount will be calculated based on the cash flow payment terms of the current customer or vendor, if there is one. In the normal payment terms code, you usually select conditions which reflect the agreement you have with the customer or vendor. In the cash flow payment term code, you can use a different code which probably reflects the real payment behavior of the customer or vendor. Having different payment terms and cash flow payment terms gives you the opportunity to get more realistic estimations about cash flow dates and cash flow amounts, and it's important to understand that the normal payment terms and the cash flow payment terms are stored in the same table in Dynamics NAV. This means that the user needs to be accurate when setting up a customer or vendor and which code to take for which purpose. Consider payment tolerance amount. For open customer and vendor ledger entries, Dynamics NAV always takes the value from field maximum payment tolerance from table 21 customer ledger entry and from table 25 vendor ledger entry to calculate the cash flow forecast. The important aspect here is that this amount doesn't change when the customer or vendor ledger entry is partly applied. This means that even if an entry is partly applied, the full amount from field maximum payment tolerance is considered. For open sales, service and purchase orders, Dynamics NAV doesn't take the payment tolerance into account at all. Also, the date ranges for GL budgets and for manual expenses and manual revenues are important parameters for the cash flow forecast calculations. It is important to know that the parameters you set on the cash flow forecast card are used for all the different sources which you select on Report Suggest worksheet lines. Let's summarize. All the different options, data constellations in single sources, entries and combinations in the cash flow forecast setup and in the different source types, together with the functional design of the cash flow forecast functionality, indicate that the cash flow forecast calculation can become very complex. It becomes clear now that with the different options you have, you still cannot expect to get a 100% accurate preview about future results regarding cash flow amounts and cash flow dates. However, the cash flow forecast functionality in Microsoft Dynamics NAV 2013 gives you an idea about the expected cash flow, and together with your experience about your business, you can come to a very good base for making good business decisions. Let's take a quick look into the application to see where you can set the parameters we just talked about. We open the cash flow forecast and select 1 to open the cash flow forecast card. And here you see the different option fields which you can set for this cash flow forecast. For example, you can select whether you want to consider discount, whether you want to consider the payment discount tolerance date, whether you want to consider the payment tolerance amount, and if you want to consider the cash flow payment terms instead of the normal payment terms when you calculate cash flow amounts and cash flow dates. And you can also select the date range for the GL budgets and for manual revenue and manual expenses. Next, we will look at some examples where we use different options in the cash flow forecast setup and different work dates. This way we will learn how cash flow dates and cash flow amounts will be calculated for open entries and orders. In the different examples, we will always look at the same entries and orders. We look at a single customer only. This is a new customer with number 36000. The customer has payment term 1 month, 8 days, 2% payment discount, and he has a different cash flow payment term 34 days, 10 days, 3% payment discount. For this customer we already have 2 open entries, one with the amount of 1000 in local currency and another one with the amount of 1000 in US dollar, where the exchange rate is 0.55. In both entries the payment terms have been applied, but the due date and the payment discount dates have been changed manually. And we have 2 open sales orders and also 2 open service orders, also with 1000 in local currency and 1000 in US dollar. And also here the payment terms have been applied, but the due date and the payment discount date have been changed manually. In General Ledger Setup, we specified that we want to work with payment discount grace period of 3 days, and that in general we want to allow the payment tolerance of 3%. You find all these details also in the workbook for this course. Let's now see how this looks in the application. We navigate to the cash flow worksheet, and we take Suggest Worksheet Lines. And here we have to pick a cash flow forecast, and we open the list and select scenario 1 where no special option have been applied. We select the source types to include, and next we tick OK. But before we do this, let's talk about the expectation. In this scenario you expect the remaining amount from the entries and the order amount for service and sales orders as cash flow amount, and you expect the due date of the entries and the order as cash flow date. The work date in this scenario is 28th February 2014. We tick OK, and then we see the suggested lines. Let's take a look at the amounts first. We open a customer ledger entry and take a look at the details. We see that this customer ledger entry has been posted using the currency US dollar. The original amount was $1,000 and the remaining amount in local currency is 550. Let's take a look at this entry. Here we see that the original amount was $1,000 also, and the remaining amount is $600, which is 330 in local currency. These customer ledger entries have been posted in local currency. Let's take a look here. And here we see that the original amount was 1,000 and the remaining amount is 600. And these are the open sales orders in local currency and in US dollar, and these are service order in local currency and in US dollar. Now let's take a look at the cash flow dates. If you look at the cash flow date of the customer ledger entries, you notice that the cash flow date is equal to the due date of the entry. Let's take a look. This is the due date and this is our cash flow date. For sales and service orders, the cash flow date has been recalculated based on the document date and the payment terms used in the document. And this is not necessarily the due date from the header of the document. Let's take a look. And here we see that the posting date is 1st January, the document date is 2nd January, and then 1 month has been added. This is the due date, but the cash flow date is different. This is 2nd February. Again, it's the document date plus 1 month from the payment terms. In the following examples, you will see that the same logic is used for payment discount dates and also for the payment discount amounts. In most cases, the dates on the headers of the documents are probably unchanged. However, if the business requires some more flexibility and you want the due date as cash flow date, then you should consider a customization. Please notice that compared with the current work date, the cash flow date can be in the past. Let's take a look at the second scenario now. We suggest new lines and we take another scenario. Let's take a look at the list. We take scenario 5 where we want to consider discount. Consider discount means that you now look at the payment discount date and the payment discount amount or the payment discount percentage. We run the suggestion again and here we go with the result. You see that the cash flow dates and the cash flow amounts are exactly the same as before. The reason is that we forgot to change the work date. Remember that the old work date was 28th February and this is after the payment discount date. So no payment discount date and no payment discount amount has been applied. We change this, set work date to 6th January 2014. And now we run the same suggestion again and take a look at the amounts, and now we have different results. Let's take a closer look at the results. We start with the most obvious amount of 980. We show the customer ledger entry. The remaining amount is 1,000 and the remaining payment discount possible amount is 20. So the cash flow amount is 980. Let's take a closer look at the next customer ledger entry. This one has been partly applied. So we had an original amount of 1,000, remaining amount in local currency is 600. The remaining payment discount possible amount is 12. The result is that the cash flow amount is 588. That's correct. For the other two customer ledger entries, the same logic has been applied. Of course, the remaining payment discount possible amount of 20 in local currency here has been recalculated with the currency exchange rate. So the amount of 539 is the correct one. It seems that exactly the same logic is used in sales orders. But in sales orders we don't have the remaining payment discount possible amount field available. Instead, we have the payment discount percentage field available. Let's take a look. And here it's important to remember that Dynamics NAV doesn't take the percentage which is used in the header, but NAV takes the payment discount percentage from the payment terms, and here we're 2%, and recalculates the payment discount from there. We've seen the same logic in the examples before when we looked at the cash flow dates only. Let's take a closer look at the dates. The cash flow date is equal to the payment discount date because the work date is before the payment discount date. If the work date would be 9th January, then the cash flow date for the customer ledger entry would be the due date. Let's take a quick look. And we see the payment discount date is 8th January, the work date is 6th January, so it's okay to take the payment discount date as cash flow date. For sales and service orders, the cash flow date has been recalculated based on the document date and the payment terms used in the document header. Let's take a look here. We see the document date. We know it's 8 days from the payment terms, so we end up with the cash flow date, which is 10th January. And it's not, as mentioned in the sales order, the 8th January. No, it has been recalculated. So again, for customer ledger entries, the cash flow amounts is calculated from the remaining amount minus remaining payment discount, and we've seen that for sales and service orders the cash flow amount is calculated from the line amount minus payment discount amount, which is calculated based on the payment discount percentage from the payment terms used in the header. In other words, for orders, Dynamics NAV doesn't look at the due date, payment discount date, and payment discount percentage from the document header. Instead, NAV looks always at the document date and the payment terms from the header and calculates the cash flow date and payment discount from there. Let's take a look at scenario number 3 now. We suggest lines, and this time we select scenario 3. This is similar to scenario 2, but this time we want to use the payment discount tolerance date in addition. So we run the suggestion. I would expect that the amounts would be the same, but just the cash flow dates would change, and we should see that 3 days are added to the cash flow dates. We run the suggestion and see that the cash flow date is now suggested with 11th January for the entries and 13th January for the orders, and the amounts remain unchanged. Let's take a look at the scenario number 4. We suggest the lines, we select another cash flow forecast, and this time we take scenario 4, where we want to use consider discount option, the consider cash flow payment terms option, and the consider payment discount tolerant date option. Select this one and suggest the lines. Let's take a look at the cash flow dates. Here we find the cash flow date 14th January. This is the posting date of the entry, which is 1st January, plus 10 days from the cash flow payment terms, plus 3 days payment discount tolerance. For the purchase order, this is 15th January because we start at 2nd January, as this is the document date of the header. Then we add 10 days plus 3 days tolerance. The cash flow amounts are lower than in the example before because this time it's not the remaining payment discount possible which has been applied, and it's also not the payment discount percentage from the payment terms, but for all the entries and orders it is the payment discount percentage from the cash flow payment terms which have been used for the calculation of the cash flow amount. Now let's take a look at the last example, and this time we select a cash flow forecast where all options have been applied. We can check this. So this time we want to consider the discount, we want to consider cash flow payment terms, we want to consider payment discount tolerance date, and we want to consider the payment tolerance amount. Let's see, and here we go with the results. The cash flow dates are exactly the same as before, so nothing has been suggested differently, because the only option we added this time was consider payment tolerance, and this does not impact the dates at all. So let's take a look at the amounts, and we start with this one. We show. Why did NAV calculate the amount of 960? Well, we have the remaining amount of 1000, and we need to deduct 3% payment discount from the cash flow payment terms. We don't deduct 20, we deduct 30. This gives us 970. And then we need to deduct the maximum payment tolerance of this entry. This is 10, so at the end the result is 970 minus 10, it's 960. This amount, this cash flow amount, is correct. We close, and we take a look at this one. We show the customer ledger entry. The remaining amount of this entry is 600. It has been partly applied, so we have 600, and we deduct 3%. This is 18, so this gives us 582. And then we want to deduct the maximum payment tolerance amount. This is 10, so the calculation is correct. 582 minus 10 is 572. But please remember that the maximum payment tolerance amount of 10 is the full maximum payment tolerance amount of the original entry. It has not been deducted when the entry has been partly applied. Why do we have a difference between 960 for the customer ledger entry and 970 for the sales header? Well, please remember that for sales, service and purchase orders, the payment tolerance from the GL setup is not taken into consideration at all for the cash flow amount calculations. Let's summarize what we have seen. The examples we talked about should give you an idea about the different options to consider open entries and open orders for cash flow date and cash flow amount calculations in the cash flow worksheet. You can influence the results by using different setup combinations and by changing the work date. And there is a lot of room for discussions about the different options. For example, if you always want to consider payment tolerance also for open orders, and which amount you want to consider for partly applied entries, the full amount or a new amount calculated based on the remaining amount of the entry. But at the end, it's also important to have in mind that whatever you do to calculate the cash flow date and the cash flow amount from open entries and open orders, the result will always be a calculated forecast only. And assumptions and estimations can change very quickly. A new order can be placed, or a customer can inform you that he can't pay at all. The results from cash flow forecast for entries and orders will probably need to be combined with additional information, other sources and factors which you have in mind from your business experience. Module 4. Analysis. In this module, you will learn which capabilities Dynamics NAV offers you in order to analyze cash flow forecast entries. Let's start with the dimensions. As in the other areas of Microsoft Dynamics NAV, also in the cash flow forecast functionality you can work with dimensions. The dimensions can be added to the cash flow worksheet lines manually, or they can come into the worksheet lines from the various sources like open orders, receivables, payables, and so on. For open orders, it is the header dimension which is taken into account for the cash flow, because this dimension value will be the one which will be aligned with the customer vendor ledger entry after posting the order. In the cash flow worksheet lines, the dimensions are not validated against any rules on the original sources, because you should not be blocked in creating the forecast if, for example, an order should be missing dimensions. If you work with dimensions in cash flow forecast, then you can use the dimension total and the cash flow dimensions detail reports to present your results. You can also use report cash flow date list. You can print this cash flow date list for each cash flow. And in this date list, the posted cash flow ledger entries are organized by category, such as receivables or sales orders, and shown over several periods. You can select the number of periods and their length when you print the date list. Once you have registered the cash flow worksheet lines and by that created cash flow forecast entries, you can use the account schedule functionality to look at the compressed results and do analysis. In Microsoft Dynamics NAV 2013, there is just a single account schedule functionality which covers the account types from different parts of the application, such as general ledger, cost accounting, and also cash flow forecast. If you want, you can even combine the different types into a single account schedule. With account schedules, you can also do further calculations and consider additional aspects. For example, remember that for open orders, payment tolerance cannot be considered in the cash flow amounts. Instead of calculating the cash flow amounts for open orders including the payment tolerance amount by adding a customization, with the account schedules, you could take the sum of the open sales orders and then use an individual factor in an extra account schedule line to calculate the new cash flow forecast amount for open orders and take some deductions into account this way. This would also be a solution if you want to consider payment tolerance for sales orders only, but not for purchase orders and open entries. Per default, all the cash flow forecast entries from the different cash flow forecasts are available in the account schedules. As the user, you can filter away the cash flow forecast entries which you don't need in the current analysis. As for the account schedules, there is no extra functionality for analysis by dimensions for cash flow forecasts. But please be aware that for analysis views, where the account source is cash flow account, the option Update on Posting has been disabled. The reasons are that the Suggest Worksheet Lines badge deletes existing cash flow forecast entries. From a user perspective, this could lead to inconsistencies between the cash flow forecast entries and the analysis views if the user expects the update to happen automatically. And a cash flow forecast including all related cash flow forecast entries can be deleted. This could also lead to inconsistencies from user perspective. Last but not least, you can also use the new chart capabilities of Microsoft Dynamics NAV 2013, which can be used for analysis of different types of entries, including cash flow forecast entries. Module 5, Summary. In this module, I will summarize what we have talked about. In general, it can be assumed that a company is doing some kind of planning already. At least company check whether their general assumptions and estimations came true. For example, when looking at the profit and loss statement at the end of the fiscal period, the actual results are compared to some planning already, regardless if the planning happens inside or outside the ERP system or just in the head of the manager. There are plans and forecasts for profit and loss and probably also for the cash flow already. For a good cash flow forecast, the main challenge is to transfer the planning from the head of the manager into the ERP system and to keep the planning up to date. The planning for cash flow forecast is not exactly the same as for profit and loss because we look at the period where we have to register the revenue and the expenses, whereas in the cash flow forecast we are looking at the time when the cash flows and at the amounts which flows. In times when the business is low, a good cash flow forecast can be vital important for the company. The cash flow forecast functionality feature in Microsoft Dynamics NAV 2013 is more a foundation than a complete solution which fits all different needs of all different companies. The reason is that the different branches and different companies require different approaches, and it is necessary to adapt the cash flow forecast to the individual needs of a customer. Before I finish this course, I would like to mention two objects you probably want to look into when you want to implement customizations for cash flow amount and cash flow date calculations. Important calculations for line amounts in open orders are done in the different triggers in report 840, Suggest Worksheet Lines. For example, in functions calculate line amount for sales line or calculate line amounts for purchase line. Another important function for calculating the cash flow amounts with payment discount and the cash flow dates is the calculate cash flow amount and cash flow date function in table 840. 846 cash flow worksheet line. If you want to influence the way Dynamics NAV calculates the cash flow amount or the cash flow dates, then you might want to look into these objects. Depending on the number of records from the different sources, it can take a while until report 840, suggest worksheet lines, creates all the lines in the cash flow worksheet. In this case, you could consider using the job queue functionality to fill the cash flow worksheet at night. It can also be helpful to use the job queue functionality if it takes long to register the cash flow forecast entries. With this, I now close this course. Thank you and goodbye.
Thank you for reviewing this course. Additional new feature courses can be found on the Partner Learning Center. If you have specific questions on any of the features shown, you can contact Partner Technical Services by emailing askpts@microsoft.com or call 1-800-MPN-SOLVE.